Look, a lot of the stuff that what I've read, they're known issues, right? They've been in the 10K and the 10Q filings as part of the risks and disclosures. They cited the delisting back in 2019. They also cited related party issues as well, and these are all known. I almost get a sense that they're trying to kick a dog while the dog is down. A short report, because they had gross margin issues because of some aggressive pricing and supply chain issues. So, I do question the timing of this report.
Yeah, just keeping in mind, Supermicro from July 12th down more than 40%. But my question automatically goes to, there's a difference between known issues and issues that people actually factor into their valuation or their expectations. Like, does Hindenburg releasing this report, in your view, make analysts maybe revisit the bear case?
And that's a great question, Bailey. And I do think so, right? Because there were some, questions in terms of who they were selling to, in terms of sanction-related parties, the Russia in particular. And that's going to raise yellow flags or red flags to the U.S. government, right? And if that's going to draw greater scrutiny, you never know what might be behind that closet.
So you said that they cited your research. What else did you guys pick out from like the 10K and stuff in terms of the risks for Supermicro?
Yeah, look, one of the things that I picked out was the related parties, right? Two of their suppliers, the CEOs of two of the suppliers are the CEO brothers of the Supermicro CEO, right?
Oh.
And that's something that I'm not thrilled about. Quite frankly, you would like a little bit of diversity in terms of the supply chain versus some of a nepotistic relationship. And, that's the big glaring one, but also they've had accounting issues in the past which prompted the delisting. The hope is that with the CFO that they have currently, they've cleaned all of that mess up.
Well, because it feels like in Supermicro, obviously everyone knows NVIDIA, but this is a stock that from over 3 years is up 1,500%, went from 1.6 billion to a peak at 58 billion. Like, when these companies go from small cap to large cap, it feels like, and correct me if I'm wrong, it feels like investors sometimes gloss over diving into disclosures and just kind of take them as a component of the S&P 500 and let that be their investment thesis.
Well, let me take that a step further. When you go for a management team from a small cap management team to an S&P 500 listed company, you're still in your preteen years, and all of a sudden you have to act like a grown up. Right?
Wow, that's a brilliant analogy.
Right? So when you have to act like a grown-up, the management team have to act like a grown-up, the IR has to act a little bit more professionally, I would sense. And then, look, you have a broader range of investors that are looking at the company right now. I'm not saying that they didn't do the work, right? But there probably was some momentum in there.
Because I do want to call out, so Supermicro, 9 buys, 9 holds, 1 sell. That's 19 analysts with the biggest shops on the street covering it. You look back in 2021, 5 buys. It was Northland, Loop Capital, Susquehanna, CJS, and Vertical Group. So to your point, your management growing up, and also I imagine the street following, has to get caught up to speed on a stock very quickly.
Yes, right.
And does that enable some of these things to maybe be glossed over?
And I will tell you, if I saw some of the research reports from this past earnings season after they had that gross margin, let's just say hiccup, theoretically, right? The commentary behind that was a lot more critical than somebody who may have been, let's just say, an avid supporter of Supermicro over, prior to the big AI boom.
I think the preteen adult thing is like a perfect analogy, and I think that just sums it all up. Unfair question, because I know you can't actually answer it, but how much more downside do you think that there is based on the fundamentals? Like, where's a good way to think about it?
So I'll answer it in this way.
Yes, please.
If I look at the valuation of the stock right now, right, we're talking about 0.3 times forward sales. Given the AI momentum, typically I like 1 times forward sales, but historically they've traded at 0.75 forward sales. So they're playing, they're valued at a discount to their historic valuation.